Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of over 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Welcome, Ian. How are you?
Hi, Don. I'm very good. Thanks very much.
Excellent. Another week has rolled around. So making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address $39 trillion in debt, contradictory fiscal and monetary policy, internal conflicts and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with Siberia Capital's latest press release. Ian, over to you. What's the news this week?
Thank you, Don. Well, everything is changing really fast. The 2-week ceasefire between the US / Israel and Iran and all the other incumbents didn't actually last very long.
No.
With Trump now threatening to blockade the Hormuz Strait, which I kind of think was what Iran was saying it was doing anyway, in a different way. Lots of countries who want the war to end, lots of countries who don't want the war to end. So it's really difficult to get any sort of resolution from that situation. So we were just discussing offline that Trump's now attacking the Pope. So there's clearly some other things going on as well, whatever it is. We had the First Lady Melania publicly denying her relationship with Epstein as if nobody in the entire world knew about it.
Yeah.
Obviously, there's some big revelation coming up somewhere, and it's handy to have a war or many wars going on to cover it up. So who knows what's coming down the line, but we focus on numbers and economics. And we just have to go with what we've got.
Now, you mentioned countries wanting to be in war and not wanting to be in war, and Trump bringing in the Pope. As an investor, how do you work your way through those various messages or approaches of those countries?
Well, firstly, geopolitics is, as ever, very messy and subject to change at a moment's notice. Really, I think that for most people who aren't actively trading the markets, then having a really solid long-term plan, owning things that are not related to any country like gold, only things that are nobody else's liability like gold or silver or Bitcoin or whatever, it's got to be in your portfolio somewhere, because we just don't know what's going to happen, and because the people deciding the fate of these things are in terrible situations.
Okay.
So really having a plan, I think this was the thread of last week's press release. You can't afford not to start having a plan. And that's the point we're at, as markets seem to be holding up, but who knows what can happen when it goes wrong.
And I agree with having a plan, regardless of whether you're investing or in business or otherwise. What are some of the plans that some of the countries are undertaking?
So they change as well, of course. So, for example, as gold has come off a lot from $5,600 an ounce, that was a Middle Eastern country selling their gold reserves because suddenly they don't know whether they're going to get all the oil revenue they thought they were going to get. So that changed the price of gold by 20%.
Right.
So as a really entangled geopolitical situation, including, maybe a new world currency, as you just said at the intro, the whole world moving into different places, the change in value of your portfolio can be almost instantaneously. And traditional stocks and bonds, are they the right thing to be in? I'm not the one to comment on that, but a plan is a good start.
Yep. And what should be part of that plan? Is debt a part of that plan? You mentioned maybe I shouldn't comment on equities and stocks, etc. What would you see as a valid plan?
Well, firstly, what is it that in 10 years' time you want your family to have? You know, if you own your own house, excellent. If you've got some gold, does it actually matter what it can be exchanged for in fiat currency because it's more insurance? How do you at least keep your wealth? Well, you've got to earn a lot of interest in possibly debasing currencies. So what's the point? Do all interest rates go to zero because it's actually meaningless? Having lots of currencies whose purchasing power is now almost zero if you look back 30 years. What's the point of earning more of it? I mean, that's one of the big issues that people will look at. Everyone's been chasing yield, but you just get more debased currency. What's the point?
Yep.
So as you evaluate what you're investing in, it's actually the denominator that's the problem, not what you've actually put the money in.
Right. Okay.
Did that help?
Well, I'm hoping the listeners got some wise words out of that. Would be more the point. So thank you for sharing. You touched on Trump and the Pope earlier. Donald is fighting things on all sorts of fronts. People have wanted to be in more, not in more, etc. What do we think he should be doing next, or what do you think he will be doing next? Is all of this just a bit of smoke and mirrors stuff? He needs a number of people on his side to help resolve this, is probably another question.
Well, as ever, the $39 trillion in debt, adding war after war, not helping that situation. How do they get out of $39 trillion in debt? Nobody in the history of mankind has ever managed to get out of that sort of situation. So everything is a distraction, as per the press release this week. Is the war in Iran a distraction? Well, for most people, it's a really serious thing. Is it a really serious thing for Trump? I'm not sure. He knows what serious or facile is. And having a punch up with the Pope is just another day in the office for him, and he'll have forgotten about it tomorrow. It serves its purpose to have distracted someone from what he didn't want them to see today.
Yep. Okay. Is there anything more you wanted to talk through on your release before we went to the charts?
Only that what's happening geopolitically is really rapidly increasing where economics are going. So as a touch point, US GDP out last week came in at 0.5% quarter on quarter.
Yep.
So it's just an early GDP number, sorry.
Yep.
But that's down from like 4% number, which would have been a year ago or less. So the US economy is clearly tanking. Employment situation is beginning to crack. AI is not just taking your job in the future, it's taking the job of employees at AI companies now. Stagflation, which is the worst economic situation you can have, where you have very low growth and high inflation, would seem to be staring us in the face.
Yep.
And the Federal Reserve seems to be determined not to help anybody out at all.
Sorry about that.
Sorry. So, the underlying economic situation is just getting worse and worse and worse.
Yep.
And we have this layer of, media covering it up.
Okay. Which charts are we going to start with this week?
We'll just go across left to right as usual, shall we?
Yep.
Awesome. So, when we look at crypto, Bitcoin's in the buy zone, which has been in since beginning of February. Yep. Really can't see much action here. The downtrend seems to have been rejected in the last couple of days, but
Yes.
not a lot happening. Ethereum,
and
where
so when you say the downturn's been rejected, what would be the background for that? Is it just the way the rest of the market's viewing the crypto in that way in the current market?
I think it's a bit of an outside issue at the moment. We're all more worried about oil, obviously gold, silver, and so crypto has become, a sideshow, or Bitcoin, shall we say, has become a sideshow. And to some extent, quantum computing has taken a lot of the euphoria out of the market.
Yep.
In Ethereum, you can see that same breakout has been rejected. Slightly messy, but we've broken back below the line. Ethereum is meant to be a big winner for this year because of tokenization of real-world assets, stocks, bonds, real estate going onto the blockchain. There's only one player in it, which is Ethereum. But the Bitcoin narrative has kept it down. So when this goes higher, it's going to go a lot higher very quickly, but it's not now. Gold, a bit of a messy chart now, but all valid. We're still under this move down where we went from 5,600 to 4,400 roughly. So the market is just constrained by that move. And as you can see, we have had lower highs and lower lows, which means we're going down and we're in a bear market. But it seems to be hanging in there. And over the weekend, as the blockade was announced, initially it went down, but has in fact come up again. So I think we're moving away from gold being the risk asset to gold being the store value. But that may take a few months to actually be in the price. Silver, fairly similar, not doing anything, hanging around, but really it's the previous price action where we went up to 120 and then immediately down to 64, which is governing where the price goes. I mean, that's halving of the price of silver in 2 weeks, which is crazy.
Yeah, that is.
While we're there, I suppose we better look at oil. So if we look at Brent as one gauge of it, you can see that we've had the big flag movement up to 120 and lots of volatility as Trump says things, other people says things happen. And we've had the breakdown and it looks like we're going to go and revisit the high again. And that's the point at which I think that markets are going to fall because the world is awash in oil. It's just in the wrong place and in some places under sanction. The dollar, this is the big driver of what's going to happen in the next few months. You can see that this line I put in somewhere here, what's that, 26th of February, clearly very sharp rising support, now broken down. I think it's going to do the same as oil and revisit maybe these highs at 100.40. This is the Dixie. But really, I think it's going to go significantly lower now. This is a trend in the shaded bit. That's a trade. That's a trend, since 2014. Obviously, very critical. We're reaching the 200 moving day average now. So this is a really critical area for global markets. And is reflected by the 10-year yield, where we have a similar sort of channel. This is going back to COVID, this support line here. We've seen the Fed cutting rates, but rates have actually gone up. And as the economy weakens, we see these continual changes of direction in that, yes, we're massively in debt. No, economy is weakening dramatically. We have to have lower interest rates. But that narrative just keeps yield in the same area. Whereas when we switch back to the framework of, how do we pay off the debt, then there's only one direction for it. So we're forming a bull flag here, looking to go higher, possibly up to 4.5% immediately. Stock markets. Now this is really interesting. I think that the stock markets are pretty bullish. unlike everything else. And so this is the Dow Jones, where you can see a really clear downtrend has broken, and we've bounced pretty sharply up. What should we look at here? Well, let's look at the S&P 500, where let's just get rid of that. We've clearly hit a big support target down at 6,550, straight through it, then straight back and up again. Look at the bounce there, the gap up to almost, the all-time high, which is here. So we're 2% below the all-time high now, which is kind of crazy when you think of all of the rest of the news going on around the marketplace. Stock markets are bullish. Long-term trend.
Are there particular industries that are more bullish than others in that index?
Well, defence companies obviously are bullish and bearish depending what the news is. Tech stocks, and I'll put the NASDAQ up there as well because I forgot to do that. Where are we? Here we are. So this is the NASDAQ, and AI stocks have been under pressure. And you can see this is a more bearish chart than the S&P. So it's gapped higher as well. So the continuing AI narrative is still there, underlying. It's probably not outperforming at the moment, but still some big changes happening. And it's really buoyed by the fact that the AI companies are cutting so many jobs, which makes them more profitable. Otherwise, to me, that the long-term winner is going to be gold, and you can see that since the breakout in 2024, despite all of the volatility, we haven't even really looked back, and we're still actually on a rising trend. So I'll leave you with that one.
Okay. Good. Thank you. And what announcements do we have coming up this week, and any other news?
So little economically this week, because we had it all last week, i.e. the inflation measures, PCE and CPI in the US were higher than expected, but not hugely higher. But it's all pointing in the wrong direction. This week we've got US PPI, which will probably be the same, and some GDP numbers around the world. So interesting to see whether we're all going to follow GDP lower. Hungarian election just been announced, or in the last 12 hours, because it was on Sunday. Viktor Orban lost. He was being supported by Trump and Vance. That means that sanctions on Russia and Israel from the EU will be more solid, especially on Israel, because Hungary had actually vetoed that. So it's a big win for the EU, which is really pretty much under the radar at the moment. And I think the ramifications of that are really big if the EU can get its act together for once and be the leader we all want it to be. I want it to be.
Okay. Good. All right. So pretty lean week, as you said, in events coming up, and a few other things going on.
Yes, indeed.
All right. Well, thank you again. It was actually fairly enlightening with those charts, especially with some of those equities as opposed to other indices. So very good to share that with us this week. If that's everything, that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thank you for everyone today. Thank you, Ian.
Thanks very much, Don. See you next week.
All right. See ya.
Cheers.